Hi everyone, this is Mark and I'm here to give a commentary on the current markets. Okay, so the last video that I did was I think it's around December 20th or something like that. Okay, and at the point of time I actually said that the market at the point of time probably isn't giving a lot of candidates to go about, but I did give some picks and I'm going to follow up on my picks in this video. Okay, so you can see that my trades are not really very active, and maybe maybe I can have even as little as 2 to 3 trades a month, or sometimes even less. If I don't see the right setup that I see, then I may not even take the trade at all. Okay, so let me just briefly go through what I actually have been looking at, because recently there was some big market pullback, so there were actually a lot of opportunities to enter again on the side of the trend. Okay, so just look at the basics. The S&P 500 first. You can see the 50-day, which is the green line over here. Okay, this green line over here is still let me just draw this out. Okay, this green line over here, okay, is still in a flat to uptrend. Okay, it gets a little bit wobbly and etc., but it's still, I think, in a very choppy environment. You can see here the market has been chopping around pretty much. Okay, and in the US markets that has been a little bit difficult to trade. Okay, but there are still plenty of opportunities if you take a look at certain stocks and sectors. All right, so nothing much to talk about the general market. It's just in choppy environment, but the general consensus is that it's still pulling the overall trend in upward motion, but it has a little bit more volatility to it as compared to last time. Okay, you can see last time it was in a very nice motion, and then suddenly bam, one big move down, and then a very big move up also. Okay, at the same time to counter the down move, and now it's been up and down in a choppy environment, which sort of resembles a little bit like this area over here. Okay, so it remains to be seen what the market will do, but since the green light is on for trades, we can take a look at the individual stocks. Okay, so in a previous webinar, right, you can just refer back to the previous webinar. I talk about PCP. So I think most important thing is I have been actually giving my picks and also been constantly following up on my picks. Okay, I think that is not very common in the stock analysis arena. Okay, and it's not like something that doesn't work, a trade that doesn't work out, I'll just leave it one side. It's not the case. I always, in fact, you learn most from your mistakes and whatnot. So it is good to even if for your own trades, you see something that didn't work, then I think it's the most important thing to learn something from it, rather than just hide away from it and etc., because that's the best way that you can improve as a trader itself. Okay, so I believe in following up on picks, okay, and also employing a very consistent methodology and trading the markets in a very logical way. Okay, I think that is more important than everything else. Okay, so PCP, this was a trade that I was looking at, okay, right over here. All right, so I entered here, and over this point over here, I think you can just refer back to my previous video. So my entry was actually this green line over here, and I got a 1-to-1. Okay, I didn't take half. I took half, but I put my stop to just remain my stops here, and so it actually came down and I got stop out at break even. All right, so sometimes I actually what I actually do is let's say if I enter around here and my stop is here. Okay, and if the stock actually moves 1-to-1, that means from here is 1-to-1. If it moves 1-to-1, usually what I do is I take half and put the stop to break even over here. But sometimes I want to give the stock a little bit more room to breathe, so I would just take half and then put my stop, and my stop will remain as it is. And if the stock actually comes down again to hit my stop loss, then I'll take it as a scratch trade lah. So no win, no lose lah. Okay, except maybe you lose out on a little bit of your brokerage, which is fairly pretty small, so it's fine. Okay, so PCP, so this is one that didn't actually work out. Okay, and then another one is CF, okay, which I talked about the last video. CF Industry Holdings. This one was a very good trade. I said that there was actually 618 pullback over here to 786. So my engagement zone is actually around this area. Okay, my students will know that. So after that, because it fell very hard, so I wanted to wait for a short-term momentum turn on the smaller time frames, and when it actually went up, I took a position at 254.11 and with a stop at 244.33. All right, and in this case, I was out at 291.07. So this was I'm not sure how much was it. 1, 2, 3, probably 3.5 to 1, or close to a 4 to 1 on this trade. Okay, so a lot of people think that trading is something about accuracy, and in fact, I have to say that it's not, because it's just like poker. Okay, you're constantly actually losing poker hands. Okay, the good players actually lose more hands when they play poker. They just throw something in there, and then if it doesn't work, they just quickly get out. And the best players are not the players that are the most accurate. Okay, the best players are those that are they write their winners when there's one, and they cut their losers very quickly. And this is the way you should actually trade. In any case, which I've talked about in many times in my previous videos. Okay, so CF, this is a good trade. So you're actually looking for trades like this, a 3 to 1 or 4 to 1 trade. All right, that will skew the risk reward in your favor. Okay, so this was a great trade. And GM was also General Motors was also a pretty good trade. Okay, I talk about a retracement trade around here, 618. Okay, my entry was 30.9382, which is over here. Okay, and sorry, my entry was 32.272. That's right, because there was a short-term momentum turn, and the entry was around here, with a stop around here, and then my exit was here, 35.147. So it's about, I think it's about 2 to 1 here. Okay, close to 2 to 1. Not yet 2 to 1, but close to a 2 to 1 for this. Okay, and then subsequently it actually did another pullback that you can actually trade it, but I didn't trade this, but this was also highly tradable, close to the 618 before it to turn. All right, bam, enter here, somewhere around here on the turn, put a stop below. The stop could be smaller. I need to go down to a smaller time frame to take a look, but this will actually net you close to a 2 to 1 also at the same time. In hindsight, you probably may not enter this trade because earnings was when was this? Earnings was about on the 5th of February. So in honesty, I probably wouldn't enter this trade, but some of the more aggressive traders may enter this trade. All right, that is totally up to you. But so this is what you want to do. You want to take maybe 3 to 4 trades. Okay, and those that don't work out, you cut quickly, and those that work out, you just let it ride and try to make at least a 2 to 3 to 1. If you can, sometimes if you're you're pretty lucky, or the market gives you a very good hand, then sometimes you can get even a 5 to 6 to 1, and that's what you want to do. All right, it doesn't necessarily have to be have to trade every day 3 to 4 times out and in. Okay, because let's just face it, if you're trading very frequently, right, your hit rate will usually drop. Okay, because I presume if you are trading multiple trades in a day, which is day trading actually in essence, then you would probably go to a very, very small time frame, which is very choppy and much harder to predict. Okay, for me, I'm used to trading daily charts, look at the weekly and the daily charts and then formulate my trades over there. And then I go to a smaller time frame to actually fine tune my entries and to look at, logical stop levels, which are not too far away. Because if you look at a daily chart, sometimes the stop levels are very far away and the risk reward may not be ideal for you. Okay, But yeah, this is what I'm comfortable with, and you know, I don't really want to stay glued on the screen. You know, last time I used to trade forex, and I used to glue myself to the screen. Sometimes I wake myself up at 3-4 a.m. just to take a look at the position. So I'm actually babysitting the actual position itself, which I find it very tedious, and it's not that what I want to do. I'd rather spend time doing things, you know, that are you know, a little bit more beneficial for myself. Okay, so it's not right and wrong, okay, but if you're interested to, you know, trade something in this manner, then I think I would be very helpful for you lah. Okay. And so some of the longer term positions that you know, I actually traded before, which is also in my video, was Walmart. You can see that last time I traded Walmart around 74.223, and I left actually a 1/4 position to let it ride. Okay, so now it's actually around the 85, 86 region, which is 1, 2, 3, 4, 5, 6, about 6 or 7 times my entry point. And you know, sometimes it pays to leave a little bit of a position there if you find that it's a high probability trade. Okay, or you can take it as a investment position. Okay, if you choose to do it. But for beginners, I would actually recommend to just trade. Okay. Because now the market has been up for many multi years already, so I think it's an environment more suitable for trading as opposed to investment. Of course, there are times where investment is very good. You know, the price is very low. I mean, even a sucker knows that, you know, maybe Keppel Corp at $5 or $4 is very cheap. I don't know, during the 07-08 crisis. So you know, during those times, of course, investment position will be better because you can buy and then you know, ride for the long haul. But when the market is up about 4 to 5 years and it's an old bull, right, then it probably may not be the best decision to do so lah, unless of course you're very confident with the outlook of the particular company. Okay, and so you see, Walmart actually also had you know, a mini pullback here that you can actually trade on the 786. In all honesty, I probably wouldn't trade this lah, okay, because I think it's I mean, you can, it's definitely you know, it fulfills the criteria, but after such a huge move up, I think chances are I will not take this trade. Okay, but that's why if you think you have managed to get a position in a small, I mean not small, in a very cheap price level, then it pays to, you know, hold a little position there so that you can you know, you can exploit the movement to its max. Okay. Another one is American Express. Okay, American Express I've also been trading, but unfortunately the trade has moved already. Okay, so this was a very nice trade that I have done. Okay, that I'm close to. I'm actually break even and I'm making a little bit. So you can see that this red zone is support and resistance zone. All right, you can see the market actually, you know, rejected price here, supported here, supported here, supported here. Went into this zone, support around here, broke through, and so this whole area is it seems to be a pretty strong demand level. Okay, so when price actually came back and hit my 786 level, okay, I went down to a smaller time frame to actually start to trade it upwards. Okay, so this is 1-to-1 for this, and I'm actually in a free trade here, so hopefully American Express can make its move. I will trail this using a weekly stop, and hopefully you can hit the 90s if the market does well lah. If not, then it's a scratch trade. Okay, so you can see what I'm doing here. I'm trying to exploit certain you know, scenarios where the risk and reward is very skewed. Okay, and if I don't do, I mean, if the market suddenly turns, which definitely can happen, and I can tell you nobody will know whether the market will turn or not, because you know, there's so many market participants, especially in the US market, so you never know when the market will turn. And don't try to predict, okay, just anticipate, participate, okay, and then if it goes wrong, just quickly get out. And if not, if it goes your way 1-to-1, then you know, keep your risk parameters tight and try to manage the trade a little bit. I think that is the best thing to do lah. Okay. Something interesting is Bank of New York Mellon. Okay, this one I've also traded it. I'm not sure whether it's too late, but I think there could be a little bit pullback coming back down here. Okay, and then maybe if you want, you can get in a nice entry point if you find any. You can see that there's a very well defined trend line over here. Okay. Okay, a very well defined trend line over here. All right, so the market actually, went from $35 all the way up to close to $42 and then retrace. Okay, and then close to the trend line over here. You can take from the 618 or you can take from the 786, whichever is more comfortable for you. Especially for my students, it's your choice. Okay, but for me, I waited for a turn. All right, so the turn was actually somewhere around here, and so I think this is another classic example of why you can use trend lines to help you in your trading. I think they are very, very valuable tools to your arsenal. It may take a while to learn. Okay, for me it took about 3 to 5 years to really look at a lot of charts and draw out things. But I think maybe I'll come out with something free for you guys. Maybe I'll do a very short, okay, probably not short, maybe a medium length trend line and support and resistance video. Okay, it is geared more for the beginners, okay, but I will put in a lot of nuggets, okay, of wisdom inside that will actually put the odds in your favor when you trade. Okay, people know how to draw trend lines. Books are very common to show you how to draw trend lines, but how do you actually draw a proper trend line, and should you adjust them in some sort of way? And what if it's very difficult to draw a trend line? What should you do then? Do you not draw any trend line, or do you just draw some funny line over there? Or there are many if and then scenarios. And also, if you draw a correct trend line, it can really help you anticipate certain reversal points. Okay, and if you're new, then I highly recommend you, or intermediate, I highly recommend you to watch the upcoming trend line video that I'm going to make for you guys. And then hopefully it can help you guys a little bit, okay, in putting the odds in your favor in your particular trading endeavor. Okay, so what else do we have? Another one is I think SPX. I'm not sure what is this. SPX is not recognized. Let me try to see if we can get it here. Oh, sorry, I think there was some error. SPX is S&P 500 anyway. Okay, okay, so now the big news was oil. So you can see oil is CL. Okay, oil has been in a very, very nice downtrend here. Okay, I mean, I don't know when the heck it will turn, but something interesting to note is that the last time where oil actually crashed from 150 all the way to $33, that was during 07 to 09. Okay, let me just edit this one. Okay, something interesting to note. I'm not sure whether it is helpful for you guys, but how come I cannot edit this? Give me a second. Okay, never mind. Let me load the style here. Okay, so you can see during the 07-08 crisis, this gray line over here, which is the 10-week moving average, okay, it actually started turning only around around 42 or something, that region. So one way you can look to participate in oil, some certain oil counters, maybe you just let oil do the same thing for this time round. I mean, I'm not sure whether it will be a prolonged downtrend or what, but at least wait for the 10-week moving average to sort of flatten, to turn up a little bit, and then break some form of prior resistance. I think that would be a better way to enter the market. Okay, so right now you can see oil is the 10-day moving average is 10-week moving average is still in a sloping downtrend, and then it's not really turning much. So just let it do its thing. Okay, don't try to catch the bottom, because the bottom is very, very tough to catch. If you're going to catch it while it's falling, then it tends to be very, very tedious to trade this kind of in a counter trend environment, especially for commodities. They actually tend to trend very well. So just let it do its thing, and then when it starts turning, then I may take a look at certain oil counters like NOV, like ExxonMobil, and all these kind of things. That tends to be more stable than the others lah. Of course, if you are more adventurous, you can go for the really mid caps oil stocks that tend to be more volatile if you prefer them. Okay, and in a seasonal basis, energy right tends to run from mid Feb to end Feb towards the end of the year. So we will see whether commodities can run in general. Not commodities, sorry, energy can start to run from February end onwards. Okay, so some ideas maybe I can give is someone like I'm looking at is Parker Hannifin. I'm sure some of you know this brand name. Okay, so you can see the retracement here. Okay, you can see that the price moved from below $100 to 133. Okay, now it's actually pulling back to this 50 region. Okay, but you can see there's a lot of resistance that could potentially turn as support around this area. Okay, so you can go down to a smaller time frame and identify small upturn or something like that, and then try to trade it with a logical stop. I think Parker Hannifin has quite interesting situation over here, and also it has some insider buying. So let me see if I can pull it out for you guys. Okay, so let me see if I can get it on for you guys. PH. Yep, so on the 5th of Feb, this director from Parker Hannifin, Muller Klaus Peter, has actually bought about 2 lots at $120.75 at about 241.5, about 250,000 US dollars. So it's sort of a vote of confidence. Of course, it doesn't mean that the stock will just go up like that, okay? But it's good that there's an insider that actually feels that it is in a value region. Okay, when I look at stocks, I look it from a holistic point of view. I don't just look at the charts and etc. Because the charts only tell you a certain story, right? You need to look for other supporting things that are not really related to the charts to actually help you put the odds in your favor. And of course, it can also determine the kind of position size you will accumulate for this particular position. Because if otherwise you're just trading from the charts, then it's very one-dimensional, and more often than not, the trade may not work out lah. Okay, so Parker Hannifin. Okay, Parker Hannifin is the one that I was talking about. Okay, this is a quite interesting idea. And one more is ADM. Okay, Archer Daniel Midlands. Okay, right now it's pulled back to the 618. It's very, very choppy the past 1 to 2 weeks. So if you can get at a good price, maybe you can put a nice stock and then see whether there's a lot of energy built up around here. So if it can actually start to make a move up, that would be good lah. Because from 54 drop down to 47 and change, I think is a decent pullback. Okay, over a period of 3 to 4 months. So I think this could be a pretty good idea also. Let's see how it works out lah again. Okay, so I think that's all for this week. If I see anything interesting, I'll let you guys know. For those who wish to to know more about the program I'm running, I've actually changed it to the Discretionary Trader. Okay, last time it was Shares Edge. I will update my students on this also. It just happened over the weekend, so there will be some curriculum changes. Okay, what I teach is still the same, but I'll bring in an external speaker also to help you guys get more different opinions and insights on trading. Okay, so if you are interested in what I do, just put in your name and email address, and I'll update you on the video updates. And if there's any interesting articles that I see, it doesn't have to be always from trading, can be from a value investing point of view, or from a fundamental point of view, or a seasonal point of view, something interesting that I see, I may actually send it to you guys. If you're interested to attend the program will be very, very likely on May the 2nd and the 3rd. Okay, so you can just go to the program tab and click register now. Okay, click register now, and it'll bring you to a form where you can just enter your contact. Okay, I'll put you on the wait list. If you want to see the full curriculum, right, you can just click here. Okay, I'll show you the full curriculum of the particular program itself, and you can read some testimonials here if you're interested. Okay, but I think my videos speak for themselves. Okay, I always follow up on my picks, and I think that's about it. If you have any questions or anything, you want to contact me, or you need help in certain parts of your trading and you want some opinions, then you can just get in touch with me over here. Okay, and I'll try my best to reply to your query. All right, thanks all.